Hi, and thanks everyone for your time and everybody tuning in. So I'm the CEO and founder of Abitibi Metals. Similar to Troilus, we are a Quebec-focused exploration and resource developer. So really, who are we and how did this come about? So I'm a member of a family office based out of Toronto and London, Ontario. We're most known for the airline business, but we are also in the real estate and mining sector. So I lead the mining sector of our office. And really, we've been in the mining business for 25 years, and that's been as a private prospect generator and as a financer and board member. But really, I was working in mining consulting. I'm a chartered accountant, working with the majors over 6 years. And really, there was a lack of prudent management of capital in the space. So instead of backing some of these lifestyle companies that we were getting burned with, we decided to put our capital and expertise and really build a team for what is, we think, a very exciting cycle that we're in. So I brought the company public in March of 2020. We announced our first flagship with the Beschefer Gold Project, which we drilled about 9,000 meters, optioned it from Wallbridge. So this is in the northern Abitibi, and I'll show you where it's located in a map in the coming slides. But last year, really what we believe is a company-making acquisition is we acquired the B26 deposit, and this is a polymetallic deposit with a current resource across both categories of 11.4 million tons at 3% copper equivalent. And really the unique thing about this deposit is since discovery in 1997, this has been privately developed by a subsidiary of the Quebec government, SOQUEM. So we're the first public company to develop this deposit, and really we've accomplished a lot in a short period of time. So Quebec is, I would argue, the top mining jurisdiction in Canada, and without the support of SOQUEM and the financing from Investment Quebec, we wouldn't be in the excellent position that we are in today. So looking at the Abitibi, so we're in the northern Abitibi, and we're next to the historical Salbay mine within 7 kilometers. And that's really key because the Salbay mine produced 53 million tons of similar polymetallic material over 20 years in an open pit that ramped into underground. And really, the reason why BHP and SOQUEM made the discovery that they did is they were looking for additional mill feed before they closed the Salbay mine. So they did drill EM anomalies along this contact, and they did make both the polymetallic and the gold discovery that we both have within the company. So with the mine being there, we have a power line that runs through the project, all your access road, the transformer. So although we're in the northern Abitibi, we have very good infrastructure. So this shows you perspective of, there's the B26 project, there's our gold project, the Beschefer project, and there's the historical Salbay mine. So this is a highly mineralized system, and SOQUEM drilled about 115,000 meters that went into the 2018 resource. So we have the majority of that core available in Val-d'Or, Quebec. So really, a timeline of what we've been able to accomplish in a very short period of time. So we announced this option agreement in November of 2023. We raised $15 million in December. That was largely done internally with Frank Justra, Greg Shamandi, amongst other strategic high net worth individuals. My family has continued to participate, and we have over $3 million of our own capital invested in the company, and we're the largest shareholders with 30%. So really, the purpose and what our mandate was is we really wanted to find what is a world-class potential deposit and really be prudent managers of capital. And I'll show you, we drill at 245 meter all in, so we get a lot of traction out of the money that we raised for the company. So we hit the ground running. We went from a 5 million market cap company up to 60 million at the end of the year. We were the top performing Canadian junior mining stock of 2023. So we ramped up to 3 drills in March, and we drilled 13,500 meters in the first quarter. We then raised another $7.1 million in April and drilled some excellent results. We are fully funded out to Q1 of 2026. So in our Q1 drill program, really, as part of our due diligence on this deposit, we really saw, and what we believed the low-hanging fruit was, the 2018 resource, which was also done at half of today's commodity prices, was solely a high-grade underground. So the opportunity that we saw was that there was a disseminated mineralization around this high-grade massive sulfide system, and we saw a strong case for building an open pit to complement this high-grade underground. So that was the key objective of our 13,500 meters of drilling, where we built out the open pit. Oh, I apologize. We built out the open pit potential. An example of that is a 1.5% copper equivalent over just under 100 meters. We extended the western strike. This is a brand new target that extends to the northwest, 500 meters away from the boundary of the deposit. This is a lower open pit grade shell. And one thing that's key is we extended the high grade zone, 11.4% copper equivalent over 10.6 meters, and that had a very heavy gold credit. So one of the things that is different from when SOCOM was developing this project is they viewed this as a pure VMS. Now we do view this as a hybrid model where we have a structurally controlled, more orogenic copper gold that runs parallel to more of a typical massive sulfide zinc silver. And I'll show you the orientation of those two lenses in the coming slides. So I think this is really the key slide that helps show the potential at the B26 deposit. So we have a current resource of about 11.5 million tons at 3% copper equivalent. We are in the process of updating the resource, which could come as early as next month. But really, we really view this as a 30 to 50 million ton target, very similar to this nearby Selby mine. And where we believe that we're going to make up that tonnage, that's a big stretch from where we are today. But with the move in commodity prices, our success that I believe we'll be able to show in the short term to the market on building out the open pit potential, I think that's going to move the needle quite a bit. But the next 10 to 30 million tons, we believe is going to come from the mid-level, the mid-level resource and the western plunge. In addition, we see huge potential for this being a western plunging system. So the SOCOM viewed this as more of a vertical deposit. We see this as a western plunge. And so we have 2 drills on site. We'll be drilling 17,000 meters between now and Christmas. And really that will be split between the mid-level resource, the western plunge, and if we're able to bring out our updated resource, we'll be doing some drill holes around the open pit area. But really to note, you can see that this deposit has been drilled with good spacing down to 300 meters vertical. And one of the things that we've done is we've modeled these high-grade plunges that you can see that really show in the lower grade envelope, we do have these high-grade lenses. Those are something that we're going to model separately, which we think will be key. And we do think that basically what you're seeing here will be duplicated at depth. And we just successfully, the first hole of the program, we tested this to depth. We drilled 100 meters under the one historical hole that defined the western plunge, and we hit an 85-meter zone with a 15-meter more higher grade, which we think will carry higher gold. And we do see the lower western plunge potential as having a better gold credit associated to it. So we announced visuals on this hole. We drilled a wedge 50 meters to the west that looks very, very promising as well. And we are drilling a second deep hole that will intercept the model about 150 meters to the west, further down the plunge. Once we're done that, we'll pause for assays. Once we have assays back, we will do additional wedges and directional drilling that we're able to cost efficiently test this model out to the west. So really, a lot of, the investment bankers say, well, who does this compare to? And we really view Arizona Metals and Foran Mining. Foran just announced a $350 million financing headlined by Agnico. It really shows the uniqueness of these polymetallics and how few of them there are around, especially in such a good mining jurisdiction like Quebec. So on an EV per pound basis, we really show that we are at a very promising level at the current time. And again, the in situ value, we have the same contained metal inventory as Arizona Metals as of today. And Foran Mining has a resource about 42 million tons. We're at 11.5 today. If we can push the needle, move it up in this resource update at 16 to 20 million tons, we're going to be closer to, I think, being able to show how undervalued we are to the market. I think part of why we are trading at an EV of 22 million, and as of today we have a $15 million cash balance, is we did start out as a small company in November of 2023. We were 5 million market cap. We're now 40 million. And we really, I think we've done very well in a short period of time, but we need to prove to the market that this isn't just a one-off, and I'm confident that we're going to deliver on that. So this shows the resource. One thing to note here is There was metallurgical testing in 2018, very strong recoveries, 98.3% on the copper, 90% on the gold in the copper gold con, 96.1% on the zinc, and 70% on the silver. And again, this was done at half of today's commodity prices, $1,200 gold, $5,500 per ton copper. So this shows the orientation of the two lenses. So that's the structurally controlled copper gold zone with the parallel massive sulfide zinc silver. So really great orientation for tonnage per vertical meter, and really with a footprint of 1.6 kilometers in the Abitibi, these are very deep-seated systems, and that's part of our thesis that you look at the Larone mine, and some of their key zones didn't have any superficial expression above 500 meters vertical. So we are employing some deep geophysics to look at the larger extensions, but also if there's other parallel lenses at the project. So again, taking a step back, B26 is a 1.6 kilometer strike length of what is an 8 kilometer trend. So we are taking a property-wide approach. We've done a property-wide gravity. We're working on some additional inversion, bringing in the downhole gravity and the limited geology from the holes outside of B26. We will be drilling some brand new grassroots targets outside of B26 in the first quarter. So our goal is to make a new discovery outside the B26, and there's a B26 and there's the historical Salve mine. So looking at our deal, and one thing that we pride ourselves on publishing is our ratio between G&A and exploration. So we maintain 16% G&A, 84% exploration, putting the money into the ground where it's going to make a difference for shareholders, while also being one of the most liquid stocks on the CSE and even comparing to the venture. So we're fully financed to drill another 37,000 meters between this year and 2025. Even after all that work, we'll still have $3.2 million of hard cash in the treasury. So we have financed a 7-year obligation in 5 months, and we will complete our option agreement by the end of next year. So really, to summarize the opportunity, this is something that's very unique that I won't have again in my career, in the fact that we're taking a deposit that was developed by essentially the Quebec government, and we're now able to showcase their hard work while really being in a very great environment for copper and gold. That's what the majors are looking for, and we're confident that, and we're not mine builders. We have the contacts, we're able to do it, but we're well positioned with our capital alongside all of our shareholders that we're able to realize a liquidity event on Abitibi. So really, key catalysts, updated resource, lots of drill results, proving out the Western Plunge, and really, I think building up credibility towards our thesis of a 30 to 50 million ton target. Touched on most of the highlights, and just to touch on 110 million shares outstanding, $50 million in cash, 30% owned by management. I'm out of time, but I'll just highlight Martin Demers as our senior geologist. He was the senior geo at Horizon that oversaw the development of the Casa Berardi mine and sale to Hecla. Looking at our advisory team, we have Shane Williams on the engineering side, success at El Dorado and West Red Lake. Eric Callio just retired as the Senior Vice President of Exploration at Agnico, and he was at Kirkland Lake Gold. Victor Cantori on the capital markets, excellent presence in the province of Quebec. Recently added Chris Levy, a very supportive shareholder and ex-chief investment officer at BlackRock, and I look forward to working with him on our U.S. strategy. So I'm out of time, but lastly, I want to thank all of our shareholders. There's lots of different companies to choose from. We're in a tough marketplace. We wouldn't have been able to do what we've done in such a short period of time without the great shareholders that we have. Thank you.